you would always want to be on the side of having good credit.
Do you think it pays to have good credit? The next topic, something else that I've seen in regards to mortgages. So lately, all over the internet, people have been going crazy, which I don't think it ended up passing, but I believe the White House White House was mentioning something about a 50-year mortgage term, which, look, 30 years is already long enough, right? So in my head, this is one of the things where you brought up earlier in this episode. You're like, oh, I know people listening to this may, question me about saying this about credit scores. I kind of feel the same way when it comes to financing things. So I'm all for using credit to your advantage, but I'm not towards, using credit to put yourself in a bind or using credit to get yourself in a bigger hole than what you're in right now. So with that being said, a 50-year mortgage, you're not going to be able to sell your home until like eight, not even 8 years, probably 10 years down the road, because all of those mortgage payments are just going to go towards interest. So a 50-year mortgage term, man, that is hundreds of thousands just in interest. And I brought this up to a client not too long ago. I'm like, look, back in 2021, 2020, prior, whatever, everyone was going crazy over the 2.9, 3.9 interest rates, which you can still get those today with new builder homes, I believe. But a lot of those offer incentives and things like that. But man, a 3% rate, you're still with 30-year financing, you're still paying double of what, the home selling price was. So imagine 50 years at 7 to 8% interest. That is almost insane. You're going to be trapped in that for a long time. The point of using your credit, in my opinion, to purchase a home and getting into a mortgage is to get a head start on a future investment. Buying a home isn't an investment right now today because it's just a liability, because it's something that's costing you money, repairs, home insurance, HOA fees, that is a liability right now. However, using your credit to get a head start and purchasing your first home or whatever, 15, 20 years from now, when you eventually get to the point where you can pay that off, you eliminate the biggest expense that you have, which is the place where you rest your head at night. So, if you can get a head start and get out of debt as soon as you can, that's a plus. Now, if you're trapped into a 50-year mortgage, you're going to be stuck for a while, in my opinion. What do you feel about that? And before you answer that, I think I actually did an episode on this, or maybe like a TikTok drawing or something that showed 15 versus 30 year versus 50 year. It's like the 15 to 30-year term, you're saving a good little bit, right? But then when you go from 30 years to 50 years, I think like the average home cost, you're only saving like $300 a month for an additional 20 years plus a few extra $100,000 in interest. I mean, do you think that's a good idea or if it's worth it?
I think I probably have two separate thoughts about the possibility of this. One, I almost kind of see it, is it a coincidence or not that the, proposal of the 50-year mortgage comes around the same time that Fannie Mae is, was talking about
Yeah.
eliminating credit scores.
Oh,
I'm a
yeah.
conspiracy theorist, but
Right.
rates what they are now. I'm not a mortgage expert, but it's hard not to wonder, is there some push, to try to encourage homeowners or prospective homeowners to, apply for mortgages or buy homes, whatever the case may be.
Hmm.
That remains to be unseen. But to answer your question more directly, I think with a 50-year mortgage, I can see both sides to it. I can see, obviously you're going to add, if you make it to the full term of maturity and paid off after 50 years, I couldn't even begin to try to do the math as to how much that house is really going to cost
Yeah.
you. I think
Yeah.
in some cases, the advantage there could be, um, in a previous life, I've had different roles where I've had to kind of educate people on kind of the same thing, actually. And I would always tell people, you could always take a longer term, which would give you a lower monthly payment. And the
Hmm.
idea is that would give you flexibility in the case of, say, an emergency, maybe,
Hmm.
emergency repair, car repair, home repair. You're
Yep.
committed to a lower payment versus a higher payment.
Right.
Now, if you're disciplined enough to always make that lower payment and make an additional payment or additional principal payments in this case, well, then that's where you would have kind of the best of both worlds because you have
Right.
a little bit more control, but your required payment on a 50-year note is going to be a little bit lower than, say, 30-year note. On the
Right.
flip side, kind of what you talked about, yeah, I mean, I think you're definitely going to build equity much slower on a 50-year note. Um, will you still be, depending on your age at the time you purchase the home, will you or anyone in your household still be alive? I mean, not to be, morbid,
Yeah.
but is your goal to pay off the home, or maybe
Yeah.
just, at that point, if your goal is not to pay off the home, or realistically speaking, the your time is not on your side, that home really now turns into a long-term rental, if you will.
Yeah, for sure.
So, it's kind of depends on what I would say. In short, it depends on what your goals are and kind of your discipline financially and things like that. But I could see kind of some pros and cons. Ideally, I would say probably hopefully most people don't opt for that, but it
Yep.
just depends on the
It
circumstances.
is what it is. Yeah. I
Yeah.
mean, to be honest with you, over the last, I want to say 4 or 5, no, just maybe 3 to 4 years now, everyone's been fighting over the interest rates and, everyone's been slowing down. At least some of the clients that I talk to, I have had clients to where they've signed up with 550 credit scores and we were able to get a few things removed off of their credit and their scores went from 550 to 650 or 680, whatever the case is. And I had a lady cry on the phone one day and was just telling me, she's like, well, Chris, I thank you so much for your help and things in that nature, but I just can't buy a home right now. The home prices are, much higher than what they were when I was in the market, a few years ago. And then now the interest rates have doubled, and my income is basically the same and inflation have gone up a few times. So
Yeah.
I've had people that signed up for the service, man, and improved their credit scores, but have decided not to purchase a home because, of course, the home price is going up. But most importantly, the interest rates that they were initially looking at specific home prices at a 3% mortgage rate. Now they're looking at 6 to 7%. What is your opinion on people that are panicking over those interest rates? Do you think it is a smart decision to just back out of buying a home, especially your first home? Is it smart to just back out of it completely until maybe they feel comfortable and save up, or maybe they're hoping that the mortgage rates will just bounce back down like it was supposed to do for the last 4 years, except, things are getting more expensive now. What is your opinion on that?
Man, that's a good point. In the most polite way that I know how, I would say a lot of these folks really need to kind of do a deep dive and kind of educate themselves financially.
Yeah,
My honest opinion is there's probably never a perfect time to buy a home. There's no way to predict interest rates. I would encourage people again to really evaluate what are their goals for home ownership.
mm,
When I purchased a home, I had a young family, I had two young children.
yep,
I couldn't imagine me personally trying to raise children in an apartment. God forbid the rent goes up or, get evicted for something. I mean, who knows? For me, owning a home uh, uh, was a sign of stability just to raise my family. So I would encourage
exactly.
prospective homeowners to ask themselves, what is the goal of homeownership? Is it
Yeah,
just to have a roof over your head? Well, depending on your level of financial literacy, you can run the math and different numbers and find out that that's probably not the best, move financially, so to speak. There's a
hmm,
lot of people that have, a lot of very wealthy people, financially successful people. They'll tell you owning a home is one of the worst things you could do.
oh yeah,
Matter of opinion, maybe it just depends
yep,
on what your goals are. But you're right. If now the interest rates are 6 or 7% instead of 3 or 4%, you might be looking at a very, very different home as far
hmm,
as budget goes, inflation. Maybe the home that you can now afford might not even meet your needs for
yeah,
your family size. So the number one thing I would encourage people to do is just say, hey, what is my goal for owning a home? Is it stability? Is it just to be a homeowner? Is it an investment that,
yep,
that's a whole nother, podcast maybe, but, buying a home
yeah,
just
for
for
sure.
investment purposes is not, not really maybe ideal, I would say,
Yeah,
so, but yeah, no, I'm definitely with you. It changes, the rates and it definitely changes what kind of home you could buy. And then
Oh, for sure.
people might get discouraged, like you're talking about your clients, and they're just
Yep.
going to hold on. But I'm a firm believer in sometimes you just got to do it. If you want to do it bad enough, just, take that leap of faith and buy the home.
Stirgus Credit Repair. Stirgus Credit Repair. If you want a new house, call us. If you need